very important week ahead of us, particularly from a macroeconomic perspective. On Monday, the 25th of June, we've got the latest German industrial confidence indicator, the so-called IFO. This business climate survey complements the ZEW economic sentiment indicator. And what's intriguing here is how the ZEW slumped in June to its lowest reading since September 2012. The IFO also fell for 3 straight months, but it then stabilised in May, so the June score will be important, as it does look as if Germany, the EU's economic engine, just might be stalling. Factory orders have fallen for 4 straight months as well. Now, none of this fits with the prevailing stock market narrative of a globally synchronised economic upturn, so attention must be paid, just in case this is a warning of a wider, more ominous trend. The other big macro news of the week will come from the UK on Friday the 29th of June, when we get the latest GfK Consumer Confidence Index. Beyond the headline reading, we'll also get the latest large purchase intentions reading. As we can see here, the GfK reading has been sort of weak and the major purchase score has tried to rally a little bit, but is still way below where it was a year ago. This is potentially worrying for a key engine of the UK economy, namely housing. After all, there's no bigger purchase than a house with a mortgage, so if consumer sentiment remains depressed, it will be interesting to see if this finally starts to filter through to the housing market, despite government initiatives such as Help to Buy and the Lifetime ISA. Further insight here will come with the Bank of England's latest mortgage application statistics, which are also due on Friday the 29th. As we can see here, mortgage applications have fallen year on year for the last 7 or 8 months, so let's see what the May figure looks like. April was just shy of 62,500 applications, while May of last year was just over 66,000. On the company front, we've also got some scheduled corporate news which should be worth a look, including statements from 3 FTSE 100 firms and a good handful of FTSE 250 members. They include full-year results from struggling retailer Carpetright and oil services firm Petrofac on Tuesday the 26th of June, a trading statement from support services player Bunzl and an analysts meeting at Just Eat on the 27th, results from Green King and annual general meetings at JD Sports and NMC Health on the 28th. And finally, trading statements from Serco and also newspaper group Reach, formerly known as Trinity Mirror, on Friday the 29th. But I suspect that the company most capable of causing a fuss in the week ahead will be coffee chain to hotels group Whitbread, when it unveils a first quarter trading statement on Wednesday the 27th of June. Remember that the FTSE 100 member hit the headlines back in late April when Chairman Adam Crozier and Chief Executive Officer Alison Brittain announced plans to break up the company by 2020, separating Costa Coffee from Premier Inn, quite possibly in response to stake building by the American activist investor Elliott, which was pushing for just such a move. Now that gave the flagging share price a shot in the arm, although there are still suggestions that the 24-month timetable is slower than Elliott and other shareholders may like. As a result, the shares still trade a good way below the all-time highs just north of £50, a level that they reached in early 2015. There may be an update on the breakup plan, although the real point of the first quarter update is to discuss trading of the operational assets. By way of comparison, figures for the whole year to March 2018 were as follows. Sales growth of 5.2% at Premier Inn, with revenue per available room, or RevPAR, up 0.2% to just under £50. Sales growth of 7.5% at Costa Coffee, with the UK growing 7.3% and the international assets growing by 8.5%, and then finally stated group sales growth of 6% year on year. In terms of the strategic goals laid out by Alison Brittain back in April, keep an eye open for any updates on the following. The planned addition of 4,000 to 4,500 hotel rooms, including 3 brand new hotels in Germany, the addition of 230 to 250 Costa Coffee sites worldwide on a net basis after some closures, rollout of the Costa Coffee joint venture in China, and the ongoing £250 million cost-saving programme. Thank you for watching, and I look forward to seeing you next time.